In today's 2-minute tax take, we are going to be discussing realtors and small business owners, and really all businesses, and the 20% income deduction that was passed in 2017. It takes effect in 2018. This is a big deal. It's a little complicated, so I'm still going to try to teach it to you in 2 minutes or less. Now, this comes from our Realtor Comprehensive Tax Cut Library. If you're interested, we hope you will check it out. This is over 9 hours of video broken up into little segments that you can search. It's really a video encyclopedia of every possible deduction a realtor can take on their tax return. Got a really good deal also for brokers where you can share it up with to 20 of your realtors. It's a great investment in your team. It's a great way to save money and stay in compliance with the tax code. It's awesome. Okay, so now we are ready to go. I'm going to set my clock here for my watch for 2 minutes and we will be off. Okay, this 20% deduction was part of the Tax Cuts and Jobs Act, which was passed on December 22nd, 2017. It created Section 199A of the United States Tax Code, and it involves a 20% deduction from taxable income for qualifying business income. If that makes sense, I hope it does. It's also for qualifying taxpayer. Who's a qualifying taxpayer, you might ask? Well, if you're a business owner, you get the deduction. If, there's an and here, and that's an if or a but, and this is it. All business owners with business income and their taxable income is less than $157,500. If you're single or married filing separately, if you're married filing jointly, it's $315,000 or less. Your income's lower than those thresholds, guess what? You get the 20% deduction from business income. It's amazing. Biggest tax cut in history for the middle class. Excited about it. What if your income's over the threshold? You may ask, or I'm going to tell you. There's a phase out. There's basically a phase out. If you're single or married filing separately, it's eliminated once your income reaches $207,500 if you're a specified service business. Very important. I'll explain that in a second. What if you're married filing jointly? It phases out at $415,000 if you're a specified service business. But what's a specified service business? If you're in one, you don't get a deduction, and those are businesses that are really these kinds of services. Not all of them. Medical, law, accounting, finance, health, that sort of thing. Also athletes and performing arts. Now, what if your business is over those limits and you're not a specified service business, like realtors? You still get a 20% deduction, but it's limited to the greater of 50% of W-2 Medicare wages or 25% of those wages plus a 2.5% special asset calculation. You're going to need to hire a professional to help you take care of it. But I can tell you, I did it. I'm going to pause it here and just tell you one more little thing. Many of you folks that are over top of that, if you have a small business and you don't have employees, such as a realtor, someone you may want to consider forming an S corporation, paying yourself reasonable wages. If you're over the limit, it'll help you get this deduction. Now remember, this came from our comprehensive Realtor Tax Cut Library. We hope you check it out, and thank you so much for watching our 2-minute tax take.